Mortgage rates spike after hotter than expected inflation. In this video, I'm going to show you a chart of what mortgage rates look like. I'm going to tell you why when the CPI or inflation number comes in hotter than expected, the mortgage bond market reacts and mortgage rates jump higher. Stay tuned. Matt Gouget, Matt the Mortgage Guy, powered by You Mortgage, licensed in 48 states. Go to greatmortgagebroker.com to connect me and my team. Let's jump into today's report, February 13th, 2024. CPI came in hotter than expected. And overall inflation rose 0.3%, which was 1/10 hotter than what they had estimated, what we had thought was going to come out in this report. Core CPI remained at 3.9%. It was anticipated to drop. And so when inflation is not headed down or we get hotter than expected inflation, it causes mortgage interest rates to jump up. It causes all the predictions about the future Fed cuts to be pushed out, right? They're saying, the Fed might not cut the Fed funds rate until into the summer, where before it was predicted that they'd cut it as early as March. And so I don't want to necessarily get into granular detail about, the energy prices component, gasoline, car prices component of inflation, but inflation's just not coming down per this report as fast as the Fed would like to see in order for them to justify cutting mortgage interest rates or the Fed funds rate, which will affect mortgage rates as early as next month. And so I'll show you what it looks like on charts that we're looking at. And here first is just an overview. Mortgage backed securities down 38 basis points. That translates to about an eighth in mortgage interest rate. And I'll show you the 30-year average where you'll see that, more clearly, 6.96 or something to 7.08. This is a live look a few hours after this CPI report was released. The 10-year treasury up 11 basis points. Whenever this 10-year treasury goes up, rest assured, mortgage rates will follow. So this is probably easier to look at and understand. Over the last 4 months, mortgage interest rates, we saw early December, they came down into the 6.62 range. They've hovered between, that 6.6 and 6.8. And then they even came down early February, only to spike back up. And then here we've been hovering around 7% over the last week or so. Today's CPI report comes out and we go from 6.96 up to 7.08. This is Mortgage News Daily. This is average 30-year fixed rate for somebody with good credit. And I think last time I looked at this in granular detail, it was paying a half a point or 3/4 point to get this interest rate. So if you've got great credit, decent sized down payment, and you're paying a half a point to a point in cost, your rate is going to be around 7%. Keep in mind, if you've got less than stellar credit, if you've got a smaller down payment, this might be even higher, right? You might be mid sevens, even high sevens. On the government loans, FHA and VA, you're going to be lower. But whatever the case is, mortgage interest rates since the beginning of February have gone up rather dramatically, right? From an average of 6.6 to 7.08, we're talking about a 0.5%. And for anybody who's buying a house, a 0.5% can translate, depending on loan size, to hundreds and hundreds of dollars per month. What does all this mean for you if you're an investor, if you're looking at buying a house in 2024? I'll give you the good news and the bad news. The good news is that when mortgage interest rates go up like this, it thins out the buyer pool. And so part of the fear I honestly had for buyers was that if rates went the opposite direction, we went from 6.6 down to 6.1, it would flood the market with demand. You would have a dozen offers on every single home, especially at the entry level, and it would be very difficult to get your offer accepted. The good news in this, and that rates are going up, is that, yeah, maybe your payment is $3,800 versus $3,600 based on rates being higher, but you can get the offer accepted. There's going to be less competition in the housing market when rates stay elevated. Will this last forever? No. Will the Fed cut the funds rate summer of 2024 and into Q3 and Q4 of 2024? It's very, very likely. And with that comes more demand. Home prices get pushed up, a bunch of stuff that is detrimental to first-time home buyers, or really any home buyers for that sense. So as much as it's hard to see that in the short term, this is probably good news for home buyers. It's probably good news in that you can get your offer accepted. And the thing I always remind people is that 30-year fixed rate mortgage that might be 6.99 or 7.25 or even 7.5% is not a 30-year loan for you. You're going to have the opportunity to refinance. Am I positive on whether it's going to be in December of 24 or June of 25 or April of 26? I'm not sure, but rest assured, you're likely not going to stay in this mortgage for more than 3 to 5 years. So even though the rate and payment might be a little bit higher than you'd like, good news is you can get the offer accepted on the house and then refinance, lower that payment in the future. Hopefully this was helpful. Connect me and my team at greatmortgagebroker.com. We'd love to help you. We're licensed in 48 states. Hopefully this is helpful. Like, comment, subscribe, do all the things for the YouTube algorithm. And if this was helpful, leave me a comment. Let me know what you think. Let me know what else you'd like me to talk about. I think we're coming up on 1,000 videos, about 1,000 videos for the last decade on this YouTube's thing. And I'm still enjoying it. So I'm going to keep doing it. Talk to you soon. Bye-bye.